We've seen that come down a lot from last year. And at the same time, we've seen an extremely weak Canadian dollar versus the US dollar. Is the Canadian dollar about to collapse? Well, in this video, we're going to talk about it and also look over some strategies that you might find useful, fruit for thought anyway. So let's get into this. So first of all, the Bank of Canada says that the loonie will be a factor when deciding whether interest rates stay on hold. So that's interesting, and we're going to dive into this article. I think it's important. So the Bank of Canada Senior Deputy Governor Caroline Rogers said that the central bank will be keeping an eye on the loonie when deciding whether to freeze rates or deliver another hike this year. Essentially meaning that if the loonie is falling, they're not going to let that happen for so long. They're going to have to hike rates in response to that, because otherwise you're going to see consumer price inflation that's going to go up anyways, and then they're going to have to hike rates as a response to that, because essentially most of the goods that Canada buys is bought in US dollars, so the exchange rate matters a lot. The Canadian dollar won't be the central bank's main focus. That will be inflation, which Rogers reiterated remains way too high. But she acknowledged that a weaker dollar has the potential to make a Bank of Canada's attempt to contain price pressures more complicated. And again, she's essentially saying what I'm saying there, which is if the dollar goes weaker, you're essentially going to see consumer price inflation that's going to go up, because a lot of those commodities and products are priced in US dollars, they're bought in US dollars, and that means that if the exchange rate is going down for Canadian dollars, then they're getting more expensive for Canadians. So that is really interesting to realize. So let's see what else is going on. Certainly we will watch the Canadian dollar. If there is a depreciation of the dollar against other currencies, particularly the US dollar, the US is one of our key trading partners. That could potentially feed through to some inflationary pressures as import costs go up for Canada. After the Bank of Canada held its benchmark rate at 4.5% on March 8th, the Canadian dollar slipped over 1% to 72 cents against the US dollar throughout the day. That's the lowest since October. Now, obviously, we covered this a lot and talked about it, how hitting that low was bearish really. But since then, we've had that rebound, which we also talked about too. And I wish that I took a trade on the back of talking about that, because I was expecting that rebound. And I expect that rebound to actually continue unless something else happens, which I don't think will for the summer. I mean, the stock market and financial markets are very, very seasonal. People don't realize this, but they are. And essentially everybody will want to go from Wall Street, have a nice summer, and then come back, and then shit will hit the fan, essentially, no doubt. And that also coincides with liquidity issues and liquidity bottlenecks that we see happen within the system during typically the fall and the spring, like we just saw. And last year we had the gilt market and the pension fund collapse that happened in the UK that was in the fall. And this year we had the banking crisis that wasn't just US regional banks, it was also Credit Suisse Bank, and now even Charles Schwab. I mean, by the time you watch this video, who knows what's going to happen to them, but it's not looking good for them. Bank of Nova Scotia economist Derek Holt has been one of the louder voices on Bay Street warning about the dollar. He said this week that the Bank of Canada appears to be less concerned about the exchange rate than it has been in the past, noting that policymakers merely observe in the policy statement that the US dollar has strengthened, and that doesn't imply harm. And you know, one of the other things, the dollar index, which I refer to as the DXY, has actually had quite a substantial correction. We've seen that come down a lot from last year. And at the same time, we've seen an extremely weak Canadian dollar versus the US dollar. So that really shows just how weak the Canadian dollar is. And the reason that a lot of people probably aren't buying into it is just the fact that the Canadian economy looks so weak. Just there's so much debt in the economy as well. I mean, why are you going to invest in businesses when the economy looks absolutely terrible? And we saw that in the UK when the gilt market collapsed and when essentially you had the pound crash that happened. It hasn't made the economy any better in the UK. There hasn't been a massive uptick in foreign investment or anything like that. That just hasn't took place. So I think it's really, really interesting. The one thing that did place in the UK is foreigners buying financial assets, particularly the stock market index, the FTSE in the UK. But other than that, housing prices continued to decline in the UK and nothing really changed that much. So anyway, really, really interesting. So now we're going to go over some charts. chart. So this is the Canadian dollar. And as I said before, it broke below. I got to extend that trend line. But you guys know who've been watching my videos since last year, those trend lines, they're in the same place they were last year. I haven't moved them. And essentially what you can see there is we had a downtrend that was happening, and then it broke out to the downside, and then it's come back up, retested it, and then it broke out again to the downside, and then we came back down here once again, and we've made a double bottom, and now we're going to likely go higher from here and have a rebound. And I really hope that happens, actually, because I'm trying to get a lot of money out of Canadian dollars into US dollars. And here's the strategy that I really want you to think about, and the thing that I actually do myself. And really, this isn't financial advice, it's just something that you can think about, and it's fruit for thought. So typically when you see the Canadian dollar going up versus the US dollar, it means that the Canadian dollar versus gold is going down, and that's what we've actually started to see take place right now. So we're actually starting to see the Canadian dollar, which has topped out, it hit an all-time high, and now it's coming back down. It actually hit an all-time high, which is significant enough, but you are coming back down now. And essentially that doesn't mean that it's anything bearish for gold. I mean, these market fluctuations, they happen. It's like I've said so many times, nothing goes up in a straight line. There is no reason to panic and get emotional and say, oh my God, the Canadian dollar's going down, I need to get all my money out of Canadian dollars. You're always going to have pullbacks and different things that happen, especially if the price moves are very, very fast and very, very significant. You're more likely to even see the upside moves even faster and more significant, bigger moves with bigger declines. So essentially what I do anyway to protect myself, I mean, it's a little bit different situation now because I need to get a lot of my money out of Canadian dollars. I don't want to hold Canadian dollars, and that's just my personal decision. Obviously I'm going to keep some in there because I live in Canada right now. The thing is that's really, really interesting about this is what I've been doing for the past couple of years. When the Canadian dollar is going higher against gold, then I am essentially loading up on gold. And then when the Canadian dollar is going up against the US dollar, I am loading up on US dollars. And essentially there's usually an inverse relationship between the two. So when the Canadian dollar is strong versus gold, that's when I buy gold. And when the Canadian dollar is strong versus the US dollar, that's when I buy US dollars. Or strong, relatively speaking anyway. It's not actually strong. I'm just talking about it in terms of technical analysis. If you look at gold, it's definitely in an uptrend, and you can clearly see that. In fact, it broke out of the uptrend that I was monitoring, came back down and retested it, and again, these are trend lines that I just haven't moved. And you can see that it hit that all-time high, which I think is extremely bullish, and I think we're going to see higher prices for gold in Canadian dollars within the next 12 months. We're going to pass that all-time high. As for the Canadian dollar, I think that we could be seeing the 2020 low at least. And if we pass that 2020 low, then that could be extremely bad for the Canadian dollar. So the 2020 low is at 68 cents. And then you've got the 2022 low, which is at 71.58 cents. So essentially, I think we'll pass both of these. I think we might rebound off the 2020 low because that was quite significant. It really depends how much the economy deteriorates when the crisis hits, which we know is going to happen. But anyway, I just thought it was interesting to really go through this. I thought it would be an interesting thing that people would want to hear because, you know, this is a strategy that I've used myself. And I think it's a good strategy because then you're always buying when things are in a correction versus getting emotional and going, oh my God, the Canadian dollar's going down, I got to buy gold. Or, oh my God, the Canadian dollar's going down versus the US dollar, I got to buy the US dollar. And then you're probably buying like at the lows, at the worst points, even though over time you'll be right, because as you can see from this chart, this has been in a downtrend and it's recently broke out of that downtrend even lower. So I mean, that doesn't mean good things, but still look at this chart, you still have massive rallies within that. And you know, back in 08 you saw this rally over $1 and we only got up to 83 cents this time. And this is because the Canadian dollar is getting weaker and weaker, and so is the fundamentals of the economy as well. So anyway, if you've enjoyed this video, you might like these videos here. Thank you so much for watching, and I will see you in the next one. Take care of yourselves, guys.